In this presentation, we will record a transaction related to office space that is donated to our charitable organization within QuickBooks Pro, QuickBooks Desktop. Here we are in our QuickBooks practice file. We currently have the open windows open. You can open the open windows by going to the View drop-down and selecting the Open Windows list. Let's first take a look at Excel to see what our objective will be. We're going to say that the office space was donated. So it's a form of donation, but unlike the normal form of donation where we would have the cash donated, we're going to have an item donated, that being the office space. So the first thing we need to think about then is, well, how are we going to put that on the books in terms of what value should we record on the books? And we're typically going to need to have the market rent value, which is what we're going to use to record it. So we're still going to record the donation. However, we didn't get cash. Therefore, we're going to debit something which isn't cash. In this case, it's going to be for what we're going to use it for, which would be the rent expense. So if we have an office space that we're consuming, that we're using as a donation, we should put it on the books then as the debit to the rent expense and a credit to the contributions. Therefore, a contribution still going up, contribution being made, and the other side not increasing cash, however, but increasing the rent expense. So it would look something like this in terms of a journal entry format. We have the contributions that would be increasing, then we have the rent expense increasing, two income statement type of activity or income statement type accounts. The one being the contributions for our not-for-profit, the other being the expense, the net result on the net income, then they zero out. If we go back to QuickBooks, then the question is, how should we record this transaction into QuickBooks? Let's think about a normal cash transaction first, and then we're going to go into and do this non-cash type of transaction. Our objective with a normal type of cash transaction is to get the transaction on the books, which would be an increase to cash and an increase to the contributions. And we would like to be able to have some kind of list telling us the donations that had been made. The form that will typically be used to do that is going to be called the Create the Sales Receipt. Now, the Create Sales Receipt is usually a for-profit type of name, so we might rename this form to something like a donation. So if we were to click on this form and we go to the Formatting tab up top, we could then customize the data layout. And we might then just want to call this in the default title rather than the sales receipt. We could call this a donation. So we could call that a donation and then say OK and OK. And that'll at least recognize a donation within the form. Now, also note that when you print this form, you may want to, this is a form that you might want to give to the person that gave the donation as kind of a receipt or a tracking of that donation. And what you would like to have it look like is, rather than basically a receipt type of format such as this, you'd kind of like to have it look like a thank you letter. So you can use this basically to give as tracking of the donation that was given, and you can reformat this letter as well to make it more of a nice letter, to like a thank you type of letter, by managing or adjusting or creating a template. We'll talk more about that in a future presentation, but in terms of just recording the transaction, this will typically be the item that we will use. When you record this item, what will happen is it will increase what we'll call undeposited funds, and that's going to be a form of cash. It goes into that account until we go to the bank account, and then the other side would be going into our, what we're going to have set up as our revenue account, the contributions on the revenue account side of things. And then we're going to have to basically make the deposit in undeposited funds into cash. Now, in this case, we don't have any cash. So what are we going to do in this case? Notice what we did here. We had a journal entry. Now, I'm going to show you where the journal entry is, and then I'm going to say we're going to recommend not using a journal entry and explain why. If we go up top to the company and financial and we go to make the journal entries, then we can enter our debits and credits in terms of a journal entry format here. But the reason this isn't as effective here is we would like to use the form no matter what type of donation we have, because the form, if we use the form, then it'll allow us to run a report to tell us who the donation came from, and that's what we would like to do. And we would also like to be able to generate basically a receipt, or at least something that we can provide to the person who made the donation to track on their record, so they have a record of the donation made. So in this case, if it was a cash donation, we would still use a create sales receipt. We would still like to use a create sales receipt here and then make the necessary adjustments in order to correct the books for the transaction that in essence is going to be a rent expense. So we want to record the contribution, and therefore we'll use the sales receipt, and then we'll make an adjustment to it. So we're going to go to the create sales receipt. We're going to go up top. I'm going to call this donor 1. So we'll call this the first donor, donor 1. And then I'm going to say tab. It's going to ask me if we want to set up that customer. I'm going to say, yes, we would like to set it up. I'm going to do the quick setup. I'm not going to put in all the customer detail. You would probably want the customer detail, like their contact information, so we can send them our newsletter. But we're going to be focusing in on the transactions here. So I'm just going to say quick add at this time. Then we're going to set the class. These are those classes that we had set up. Now this is going to go into the class of unrestricted. And we're going to have it unrestricted, and I'm going to put everything to start off to unrestricted fundraising. And then we're going to go back into it at a later time and break it out according to those percentages as needs to be done at that point in time. So we're going to put everything that's going to be unrestricted, in essence, into the unrestricted fundraising first. Then if we tab through this, we're going to say the date. I'm going to say is going to be 01/01/20, January 1st, 2020. The sales number, I'm going to keep that as the default. It's populating on its own. We're then going to have to set up an item. So I'm going to type in the item. This is going to be the item that should basically show up, and it's going to be directing where the income statement account will go. So I'm going to call this a donation, and then I'm going to set up that item and say, yes, we need to set it up. It's going to be a service type of item. So these are items we would typically think of setting up if we were to run the business activity where we would actually have had a service that was provided, which is the reason that we're basically getting the payment here. So in this case, obviously, we may not have had a service. It was just a donation that would happen. We're still going to set it up for QuickBooks purposes as a service. We're going to say that we have the donation. I'm not going to put a rate because the donations obviously could change whatever the donation is that has been chosen to give to us. And then we're going to put the account. Now we're going to have to add the accounts as we go. We're going to be adding the accounts as we go. So I'm going to type in the name, which is going to be contributions, and I'm going to say unrestricted. So it's contributions unrestricted, without restrictions. Tab. We're going to set that up. And so that's what we have. It's going to be an income type of account. Now notice if I go to Excel, I'm going to shorten the names here. That's why I'm going to say unrestricted instead of without donor restrictions, because we're going to try to shorten the names. QuickBooks will not allow too many characters within the name field. So if we go back into QuickBooks, I'm going to say save and close. And there we have it. That looks good. So we're going to say OK. So there we have the donation is set up. We're going to put the amount, and the amount is going to be for the 35.8. So I'm just going to put that in the rate, 35.8. And there's going to be our transaction. Now, when we record this, it's going to increase undeposited funds, and the other side is going to be going to our kind of revenue type of account that we just set up. The revenue side is right. We don't really want it in undeposited funds because where we really want to put it in is that rent expense on the other side of things. So on the debit side of things, or on the increase to the debit, increase to the undeposited funds. So I'm going to say save and close. And let's check it out. Also note that as you do that, it's going to have one item here that says, hey, we have something that needs to be deposited to the bank. Again, you don't need to deposit to the bank because you don't have it. We just wanted to create the record of the sales receipt. So if I go to the reports up top, and then we go to let's go to the accounting and taxes. This is going to be a trial balance type of report, which is an easy report to look at to review what we have done. Trial balance. Changing the dates up top from 01/01/20 to 12/31/20. That's January through December. There's our increase to undeposited funds. There's the increase to the contribution unrestricted. If you take a look at the profit and loss reports up top, and we go to the company and financial profit and loss report, changing the dates from 01/01/20 to 12/31/20. Then we got our contributions, basically our revenue type of account in the profit and loss. Now we can also go up top and go to the reports up top. We can go to the sales report, and we can use the sales by customer detail report. And then we can actually see the person who made the donation 010120 to 123120, and there we have the person that made the donation, which is going to be the donor 1. Now this could be a useful report in order for us to track that information for the people who have made the donation. So this is something that we would like to have a record of, which is one of the reasons we would use the sales receipt instead of just simply the journal entry to enter the transaction. Now, however, we're left with, I'm going to say don't save that, we're left with this amount on the trial balance that's in undeposited funds. So I'm actually going to put that into the checking account and then record it where we want it to go, which is going to be to the expense account. So I'm going to go to the home tab then. I'm going to record the deposit and then make the adjustment in order to put it into the expense account. To do that, we're going to need to set up the bank accounts. I'm going to set up 2 bank accounts. One, I'm going to set up, in essence, a clearing account, and the other is going to be our major checking account. So I'm going to go back to do that. I'm going to go to the lists drop down up top. We're going to take a look at our chart of accounts. We're going to go into the chart of accounts. I'm going to set up first our major bank account. We're going to do that by going down to the account drop down, which is really an account rise up. So the account rise up, we're going to go into the new. We're going to set up our checking account. Now that's going to be a bank type of account. So you want to be in the bank type of account. That's going to be important. We're going to say continue. And then I'm going to call this one just the checking account. Checking account, that's going to be our major checking account. You might want to put the name of the bank or something like that. Last 4 digits of the number if you have multiple checking accounts can be useful in order to know which one we're talking about. I'm going to say save and close then. And then I'm going to make another checking account, which is just going to be a clearing account. It's going to be something that I'm going to put that deposit into and then make the transaction to record it to the proper expense account, which is the other side of the journal entry we want to see. So I'm going to go to the accounts drop down or rise up once again. I'm going to say new. I'm going to call this a bank account. We're going to select I'm going to say continue. And this I'm just going to call it a clearing account. So meaning it should always be at 0 in essence. Then I'm going to say save and close. And I don't want that. And then so there's going to be our 2 checking accounts. Now they're going to be the 2 bank type of accounts. If I close this back out, then now I can record the deposit. I'm going to put it into the clearing account and then take it out of the clearing account, basically put in, which would be similar to basically writing a check. Although it's not a check, all we're doing is taking it in and out of the clearing account in order to put it into the expense. So we're going to go to record deposit. And then I want it to be recorded this deposit. So we'll check it off. There's the $35,000. We're going to say okay. And then I'm going to make the deposit not into the checking account, but the clearing account. So and I'm going to say no. So there it is. And then we're going to say save and close. Yes. And the next item, if we see what we have now, let's see what we have done. If we go back to the trial balance, what has happened now, I'm going to say don't show me that again, and yes. And now we put it into the checking account, which is the clearing account. Where do I really want it? I want it to be in the expense account. So now I'm going to take it out of there, kind of writing a check, but it's not actually a check. No check is happening. We're not going to issue a check. We're going to use the check form in order to write it out of there and put it into the expense account. So we're going to go back to, and I could do this a couple different ways. I'd prefer to use the register. So I'm going to go to the banking up top. We're going to go to use register. I'm going to choose the register of the clearing account, the clearing bank type of account, and okay. And then we'll record the transaction, and I'm just going to say that we have the payment of, it's going to be the $35,800, which is going to make it go back to 0. The other side is going to go to rent expense, which we're going to set up as an expense account. Tab, set up. It's going to be an expense type of account. That's what we want. Save and close, and okay. And that takes it back down to 0. So we're back down to 0 now. And so our objective, let's see what we have done. See if we achieved our objectives here. If we close this back out, back to the trial balance, we see now that we have our transaction, which is a credit to the contribution unrestricted and a debit to the rent expense. That's what we want. This isn't a normal transaction. So I note this, we started off with a kind of a tricky one here. And then if we look at the profit and loss statement, we see that we have the contribution and the rent netting out to 0. And the key here is why we couldn't just enter a journal entry other than us not wanting to use debits and credits possibly, is that we can now track the donation that was given to us and have a record of it. So we can go to the reports up top, we can go to the sales items, and we can look at that sales by customer detail report, which is a nice report to be able to run at 01/01/20 to 12/31/20, and then we get our information for the name of the customer.